Ladies and gentlemen, good day and welcome to Gujarat Energy Limited's erstwhile Gujarat Gas Limited's Q4 and financial year ended on 31st March 2026 earnings conference call. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Company Secretary of Gujarat Gas, Mr. Sandeep Dave. Thank you, and over to you, Mr. Dave.
Thank you. Good afternoon, ladies and gentlemen. A very warm welcome to Q4 and FY25-26 earning call post effective date of scheme of arrangement under the aegis of Gujarat Energy Limited. We have with us our Managing Director, Srimati Avantika Singh Aulach, IAS. Now I request MD Madam to share business updates. Madam, over to you.
Thank you, Sandeep. Our valued shareholders, distinguished analysts, and representatives from the investor community, ladies and gentlemen. On behalf of Gujarat Energy Limited, I, Avantika Singh, MD of GEL, extend a warm welcome to all of you to this earnings call. Thank you all for attending today's earnings call. We are here to discuss the company's operational and financial performance for the fourth quarter of FY26, as also for the full financial year 25-26. Q4 of the financial year was marked by contrasting situations with several positive developments in the form of progress on our scheme of arrangement, as well as our highest ever CNG segment sales, and several difficult situations in the form of gas market instability caused by the conflict in Middle East. I propose to first update you all about the scheme of arrangement. On 17th April 2026, we received the final order from Ministry of Corporate Affairs approving the scheme of arrangement. After completing all formalities, the scheme of arrangement has become effective from 1st May 2026, which coincided with the Gujarat State Foundation Day celebration. So, on 1st May 2026, Gujarat State Petroleum Corporation Limited, Gujarat State Petronet Limited, and GSPC Energy Limited have been merged into Gujarat Gas Limited. Consequent to their merger into Gujarat Gas, GSPC, GSPL, and GSPC Energy Limited have ceased to exist. Concurrently, with the merger of GSPL into Gujarat Gas, the gas transmission business undertaking has been demerged into GSPL Transmission Limited or GTL. As was envisaged under the scheme, the name of Gujarat Gas Limited has been altered to Gujarat Energy Limited with effect from 14th May 2026. The new name reflects the positioning of Gujarat Energy Limited as a true integrated energy company. While the scheme has become effective from 1st May 2026, the appointed date for merger of GSPC, GSPL, and GSPC Energy Limited into Gujarat Gas 1st April 2024, and the appointed date for demerger of gas transmission business into GTL is 1st April 2025. From a financial reporting perspective, FY25-26 financials and restated financials of FY24-25 do not provide a like-to-like comparison. This is so because the restated financials of FY24-25 include the financials of gas transmission business undertaking of GSPL as well, which does not form part of FY25-26 financials due to effect of demerger having been given from 1st April 2025. Getting back to progress on implementation of the scheme of arrangement, 12th May 2026 was declared as the record date for issuance of shares of Gujarat Energy shareholders of GSPC and GSPL. The allotment has been made on 16th May 2026. An application to BSE and NSE has been made seeking listing permission for such additional shares of Gujarat Energy allotted to the shareholders of GSPC and GSPL. we expect to receive listing permission from BSE and NSE in next 7 to 10 days, which will enable us to initiate corporate action for crediting the additional shares to demat accounts of shareholders of GSPC and GSPL, followed by actual listing and trading of additional shares of Gujarat Energy on BSE and NSE. In the meantime, GTL will also commence steps for declaration of record date for issuance of shares of GTL to the shareholders of Gujarat Energy, followed by listing and trading permission for GTL's shares on BSE and NSE. We expect the entire process for listing and trading of GTL's shares to be completed by end of July 26. I now propose to move on to our operational performance during the period. We now have 4 major business segments in the form of city gas distribution, gas trading, exploration and production, and wind power generation. Out of the said 4 segments, the 2 segments of gas trading and city gas distribution hold the lion's share in our revenues and profits. I would like to begin with the gas trading segment. This segment is singularly the most value accretive aspect of merger of GSPC into Gujarat Energy. Just to give you all a heads up on how significant this segment is, pre-merger, GSPC's gas trading segment revenues during the last 5 financial years of 2021 to 24-25 aggregated to more than rupees 1 lakh crores, while the EBITDA for the same period was in excess of rupees 9,000 crores. Our gas trading volume for FY25-26 stood at 10.2 MMSCMD, of which approximately 5.3 MMSCMD of gas was accounted for as inter-segment sale, since the said supply was made to our own CGD segment. Thus, the trading volume net of inter-segment sale stood at approximately 4.9 MMSCMD. In FY24-25, our gas trading volumes stood at approximately 12.6 MMSCMD, against which the FY26 volumes fell by about 19%. Despite this, due to our diversified sourcing portfolio, our gas trading segment was able to deliver strong profitability, with earnings before tax from the segment increasing to 1,334.61 crores in FY26 from 1,222 crores in FY25, demonstrating our resilience despite a challenging business environment. We already have access to competitively priced long-term LNG supplies from various international suppliers under different LNG SPAs, aggregating to approximately 2.96 MTPA of LNG, which translates to approximately 10.66 MMSCMD of gas every year. We are committed to adding more volumes of competitively priced long-term LNG into our sourcing portfolio. During FY25-26, we have signed 2 long-term LNG SPAs aggregating to up to 1.36 MTPA of LNG, which translates to approximately 4.9 MMSCMD of natural gas supplies with Qatar Energy and Uniper Global Commodities. We continue to pursue opportunities to add more long-term volumes. We also effectively managed our long-term regasification contracts at Petronet LNG Dahej terminal, totaling a firm capacity of 2.25 MMTPA in highly volatile global spot markets and domestic demand shifts. Moving on to our next important business segment, that is the city gas distribution segment. The CGD segment is further subdivided PNG, PNG domestic, PNG commercial, and PNG industrial segments. Talking of the CNG segment, we achieved our highest ever PNG volume of 3.6 MMSCMD during Q4 FY26, representing a 12% year-on-year growth, with Gujarat recording an 11% increase and areas outside Gujarat delivering a notable 18% growth in Q4 FY26 compared to Q4 of FY25, underscoring our success in deepening our presence across geographies. Our CNG infrastructure infrastructure expanded to 839 stations. As of March 26, the CNG vehicle base across our network reached approximately 17.68 lakhs compared to 15.4 lakhs a year earlier, reflecting a solid 15% growth. CNG continues to offer a compelling economic advantage, being approximately 47% cheaper than petrol and 15% cheaper than diesel when compared to current pricing. Talking of the PNG domestic segment, we continue to witness healthy growth in the segment during the quarter. In Q4 FY26, we registered approximately 43,000 new domestic PNG customers and commissioned more than 35,400 connections. With this, our cumulative domestic PNG customer base has crossed 24.18 lakh customers. In the wake of constrained LPG supplies caused by conflict in the Middle East, Government of India took policy measures to boost PNG connections for domestic usage. A PNG penetration drive was launched across India to replace LPG with PNG for domestic cooking purposes. As a part of the PNG penetration drive, we have taken various initiatives such as aggressive marketing campaigns in print, media and digital platforms, appointment of direct agencies to expedite customer registration process, mobilizing additional contractors to execute new connections, and prioritizing outreach to essential category customers such as hospitals, hotels, community kitchens, etc. Our efforts have led to several visible results. During March to May 2026, we could convert 86 residential societies comprising approximately 13,000 households as LPG-free societies with 100% PNG connectivity. As of May 26, we have cumulatively converted a total of 2,835 residential societies in our GAs comprising approximately 4.86 lakh households as LPG-free societies with 100% PNG connectivity. We also commissioned new commercial units which increased from 152 in March 26 to 527 by the last week of May. The PNG commercial segment has delivered steady growth. As on March 26, we serve more than 16,000 commissioned commercial customers across our network. We expect customer additions in both domestic and commercial segments to remain robust as our newer geographical areas in Punjab, Haryana, Madhya Pradesh, Rajasthan and Maharashtra continue to mature and enhance customers' penetration levels. In the PNG industrial segment, sales volume was 4.19 MMSCMD in Q4 FY26, while the sales volume in Q4 FY25 was 5.03 MMSCMD. However, the sales volume in this segment has increased compared to Q3 FY26, which was 3.93 MMSCMD, registering an overall increase of approximately 7% quarter on quarter. As you are all aware, Morbi Ceramic Cluster remains our largest partner in PNG industrial segment. Our successful supply strategy has provided significant support to the Morbi ceramic industry during the crisis period of March to May 26. The number of units of taking gas increased from 83 units with gas consumption of 0.6 MMSCMD in March 26 to 710 units with gas consumption reaching approximately 8 MMSCMD by the last week of May 26. The average volume in Morbi ceramic cluster during the quarter was 2.02 MMSCMD and volumes other than Morbi cluster was 2.17 MMSCMD. The Morbi cluster volume registered an increase of 21% in Q4 FY26 as compared to Q3. The volumes other than Morbi cluster reduced marginally by 3.5% in Q4 FY26 compared to Q3. Looking ahead, propane supplies are expected to remain impacted over the short to medium term, which may further encourage industrial customers to increasingly rely on natural gas to meet their fuel requirements. At the same time, we continue to closely monitor key market dynamics, including spot RLNG prices, availability of alternate fuels, and end consumer demand trends across industries in our operating areas. Our focus remains on maintaining the right balance between volume growth and sustainable margins while continuing to reliably serve our customers. I now propose to provide highlights of our financial performance. For Q4 FY26, EBITDA stood at 943 crores compared to 790 crores in the corresponding quarter of the previous year. For the full year, EBITDA stands at 3,772 crores as compared to 3,241 crores in previous year. PAT for the full year stands at 2,299 crores as compared to 2,308 crores this year. We are pleased to announce that our Board of Directors has recommended a dividend of rupees 8.9 per share, equivalent to 445% of face value, with a total dividend outgo of approximately 135 crores, reaffirming our commitment to delivering value to our shareholders. The year also marked our embarkment on the digital transformation journey. We have planned for a more integrated and future-ready organization through planned ERP expansion, AI-enabled analytics, advanced metering infrastructure, SCADA implementation, and broader automation initiatives. These investments will strengthen operational efficiency, enhance decision-making capabilities, and support sustainable growth in the years ahead. As a part of our business development strategy, we have engaged McKinsey as a strategic consultant to evaluate growth opportunities within our existing businesses, as well as to advise on both organic and inorganic expansion initiatives. We have taken up the business development strategy initiative with the primary objective of setting up GEL for steady growth over the next decade. The initiative aims to accelerate core business growth, define expansion opportunities in adjacencies and emerging energy segments, and create a future-ready portfolio. The initiative seeks to strengthen organizational capabilities in the post-merger context and build a structured implementation plan to translate strategy into measurable outcomes. ESG considerations remain central to how we create long-term value for our stakeholders. As part of our commitment to ESG initiatives, we have signed 24 new tripartite agreements with biogas producers for purchase of compressed biogas, taking the total tally to 35 agreements with a total volume of approximately 1.6 lakh SCMD of CBG. By virtue of our average Q4 PNG sales to industrial consumers, reduced carbon dioxide emissions by approximately 60 lakh kg per day due to PNG utilization by customers instead of coal, and through its CNG sales reduced carbon dioxide emissions by approximately 19 lakh kg per day due to CNG utilization for transport instead of petrol or diesel. At Gujarat Energy, we have the highest standards and a strong culture of safety. GEL is an ISO certified organization for integrated quality, occupational health, safety, and environment management systems. We build, create, and maintain a safe and reliable gas network in our areas of operation. Looking ahead, while global energy markets continue to face uncertainty due to geopolitical developments, we remain confident in our strategy. Our diversified sourcing portfolio, strong infrastructure base, disciplined capital allocation, and customer-centric approach positions us well to navigate challenges and capture growth opportunities arising from India's increasing transition towards cleaner energy solutions. I would like to thank you all for sparing your valuable time for attending this call. With this, I now request the moderator to start the Q&A session. My leadership team and I would be happy to respond to any queries that you may have. Over to you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Proval Sen with ICICI Securities. Please go ahead.
Thank you for the opportunity. I hope I'm audible.
Yes, please go ahead.
Yeah. So a couple of questions. Firstly, on Morbi, earlier, indications in terms of the gas equivalent demand in the entire region has been that it is around 8 to 8.5 MMSCMD. And as per the guidance given by MD ma'am, the volumes have already reached close to 8 MMSCMD. So is it fair to assume that at least in the near term, volumes are hitting a peak level, or can further growth be expected, assuming propane continues to be tight as far as supply is concerned in the region?
Okay. So, as of now, we are selling close to 8 MMSCMD, but I think what we hear from the customers that it can reach up to 8.9, 8.8 MMSCMD. So there is a gap of almost 10% or so.
Okay. And can we get a sense, sir, of what is the pricing in Morbi and other than Morbi industrial regions? Just the range would also be helpful.
So basically, we are selling currently in Morbi close to 75 rupees per SCM. And non-Morbi would be close to 8 rupees per SCM.
78 rupees, sir, if I heard you correctly?
Non-Morbi would be close to 68 rupees per SCM.
Okay, non-Morbi is 68 and Morbi is around 75 on, right?
Yes.
Okay, got it. And sir, the other question was basically with respect to the sourcing mix. If we can kindly get a sense of what the sourcing mix is right now, in terms of, different what are the arrangements in terms of LNG, Brent linked or Henry Hub linked, and how much was the APM and New Well gas that we got? If you can kindly break it down source-wise, that will be very helpful.
So is this for the CGD or?
For the entire company also would be fine, sir, if you can give us a percentage mix.
APM would be close to 2 MMSCMD. New Well gas would be close to 0.5 MMSCMD, 0.5 MMSCMD. Then we have long-term contracts close to 3.5 MMSCMD, and short-term almost 3.5 MMSCMD.
So, sir, these long-term are all Brent linked or in terms of pricing benchmarks?
Majority of them are Brent linked.
Okay. One last question, sir, if I may. With respect to the blend between the trading and, the net volumes that was mentioned. So out of the 10.2 MMSCMD, I think what was mentioned was 5.3 was the inter-segment sales, which basically means the LNG that was procured by the company for Gujarat Gas CGD business. And the net volume was, 4.9 or so. What's the current run rate in terms of the trading business? Is it possible to share for Q1 so far?
It's close to, whatever increase is there is basically Morbi. So around more trading volume is close to 5.5 MMSCMD, and the rest would be like 110. No, right. So you're asking about Q1. The total CGD volume is close to 14 million. And which includes APM, PM, New Well gas, and others. And the trading business of GSPC is close to 5 million.
Okay, so the net volume for trading is 5.5 out of the 14 that Gujarat Gas is doing in the CGD business right now, roughly.
Yeah.
Okay. All right, sir. Thank you. I'll come back for more questions. Thank you.
Thank you. A reminder to all the participants, please restrict yourself to two questions. Next question comes from the line of Hardik with ICICI Securities. Please go ahead.
Thanks for the opportunity, sir. Two questions. Basically on, the tax benefit that is coming out of the merger. It's only the 164 that is left as 164 crore is left as on March 26, or there's an additional something? The second question is on the CapEx. What would be our CapEx guiding for the CGDs business and as well as the trading segment? If you can just, give some guidance.
There is no CapEx with respect to segment. And with respect to your tax issues, basically we had a tax losses of close to 7,200 which came in at the time of merger. That is on 1st of April 2024. Of that, close to 2,800 got absorbed in 24-25, and in 25-26 we got absorbed around 2,500 crores. So there is a balance of close to 1,900 crores which is remaining. So any profits up to 1,900 crores, there will be no tax. Over and above that, there will be tax.
Okay.
Yeah.
CapEx guidance on CGD and trading segment?
Yeah, CapEx guidance on CGDs will be close to 1,000 crores, and with respect to the E&P business will be close to 100 crores. Basically, we'll be drilling few wells. So to the extent of that, basically we'll be having close to 100 crores of E&P operation. Okay.
Okay. That's helpful. Thanks.
Thank you. Next question comes from the line of Kishan Mundra with DAM Capital. Please go ahead.
Hi, sir. Thanks for taking my question, and congratulations to the entire team on getting the merger through, sir. I had two questions. So firstly, if you could, on the power business, so from what I gather, I think the PLF load factors in our power plants are in single digits. So, and I think we've reported losses in the segment for the financial year as well. So if you could throw some light on the business and what is the outlook on the business from here on?
Yeah, I think the losses which they have reported is basically certain exceptional items which came in, especially the forex loss with respect to the contracts which they have with BHEL, and other is basically the impairment they have done to some extent. Yes, there was a PLF low with respect to GPPC because there the PLF was close to 1%, and with respect to KCG it was close to 6.5%. Yes, we are looking at an overall level. We are looking at a strategy of reviving this company, basically assigning or aligning it with some other businesses so that the power plant can be used to the maximum capacity, and basically this also helps in our trading activities also because we will be importing gas to that extent. So we are in a discussion to relook at this opportunity which is there. We don't look at it as a drag as on date, but yes, on a long-term basis, it will be an opportunity for us, which practically we are having 1,000 megawatts of power which is there. So basically, that's an opportunity to sell gas to them also. So we are looking at certain combinations over there. So basically, we'll come back to you gradually on this.
Okay, and is it possible to quantify what the quantum of forex losses and one-offs are in this year or quarter?
The forex losses with respect to GSCG is close to 15 crores, and with respect to GPPC is close to 23 crores. Losses in the sense they have a contract with BHEL, that is the EPC contract, wherein certain value of the contract which to be paid is denominated in US dollars. So that is the notional loss that they have had this time.
Okay. And second question on the outlook of the gas trading business, sir. So, I mean, what are the nature of contracts that we have there with our customers? And I mean, are these like back-to-back contracts with respect to the long-term agreements that we have signed with our suppliers? So just wanted to understand, I mean, because given the fact that we have one of the highest profitability in trading on a per unit basis, so what is the outlook there? Can we maintain the current profitability run rate in that segment? Or can there be a lot of volatility as well?
We do have long-term contracts in line with the long-term purchase agreement that we have. So, for example, in fertilizer segment, we have contract till 2028, and then we are talking to all these fertilizer units for extension beyond 2028. In addition to that, we have long-term contracts with various CGD companies other than Gujarat Gas as well, and industrial clients like refineries and other industrial customers. So we do have a mix of fertilizer, CGD companies, industrial consumers have long-term contracts. Obviously, we will not like to expose ourselves because we have purchased some few volumes on long-term contract basis. So yes, there is a good mix of back-to-back contracts based on whatever purchase we have. We have sold it on a back-to-back basis with the downstream consumers.
Okay. So the current profitability levels, we are confident that we can maintain those, right?
Absolutely.
Okay. And these long-term contracts that we were earlier referring to of 2.6 million ton of LNG portfolio and then additional 1.36. So this 2.6 includes 1.36, or these 1.36 million ton is over and above the 2.6 million ton?
So this 2.6 is existing and 1.3 is in addition to that. Sorry. 1.36 includes is within this 2.6 MMTPA.
Okay. And when is this 1.36 starting, or has it already started?
So one has already started. The other one starts in 2028.
Okay. And are there any contracts which are expiring then?
So one Qatar contract expires in 2028, but we have the new contract which will replace that with higher volumes.
Okay. Okay, understood, sir. I'll come back in the queue if I have more questions. Thank you.
Sure.
Thank you. Next question comes from the line of Achal Shah with Ambit Capital. Please go ahead.
Hi, sir. Am I audible?
Yeah, you're audible.
Sir, so what was the EBITDA per SCM without the impact of the amalgamation for either FY26 or 4Q FY26 for the CGD segment?
Okay. For the entire year, it was close to 6.16.
Got it. And sir, can you reiterate so how much boost in margins will be there or moderation in RM cost in the CGD segment due to the amalgamation structure? Like there will be some VAT elimination, and I'm assuming that there is some margin uplift due to lower sourcing costs because the trading segment will not earn any margin while supplying to CGD. Is the understanding correct? And what is if you can quantify some?
Yeah, I think the businesses will be running as it is. So there will be just as we showed you now, that's an inter-segment sale which happens. The same way it will be happening going forward also. Yeah, with respect to the sourcing advantage, definitely we'll be having with Gujarat Energy with respect going forward. That advantage will anyway be reflected in the profitability also.
Got it. Thanks.
Yeah.
Thank you. Next question comes from the line of Maulik with Equirus. Please go ahead.
Hi. Thanks for the opportunity. Just a couple of questions. On that trading profitability in FY26, it's approximately around some 1350 CR or something. Are there any one-off in that? That's number one. Number two, we have some of this exceptional item related to that LNG regasification business, particularly with Mundra. Can you just explain that in detail? What are those, from an accounting perspective, those exceptional items?
I think exceptional item. Yeah, your first question is with respect to?
To the LNG trading business.
In the financial year 25-26, the only one thing is that basically we have this we have a refund of the customs duty which is there.
Okay. So if I adjust that, the recurring profitability is around 1,500 CR on the trading.
It will be. We'll be maintaining that 1,100 to 1,000 to 1,100 CR of profitability would be there.
Okay. No, but it's in the segment, it shows it 1,367 crore or something, that number. So are there any more, if you look at the standalone business, for this FY26 gas trading EBIT is 1,334 crore.
Yeah.
Yeah, and you are saying around 1,100 crore will be the run rate. So is there another gap between this? Are there any one-off in that LNG trading?
That one-off would be, see, we have an agreement with Petronet LNG with respect to the regasification facilities. In GSPC LNG, we had diverted certain cargoes over there. So basically, we had a back-to-back agreement with them. Any liability coming in, they will have to fulfill. To that extent, one-off is there. That's close to 200 crores.
Okay, so that is close to 200 crore. And the 50 crore is some refund which you mentioned.
Yes. Right.
And what's the additional stake we got because of this arrangement in a GSPC LNG?
No, there is basically this outstanding was converted into equity by them. So that's the reason there is an increase in the equity shareholding of Gujarat Energy into GSPC LNG.
Now the stake will be closer to, earlier it used to be 25%, if I remember across all the...
At the time of the merger announcement, it was close to 14%. Now it is close to 36.8%.
That's why it's in a part of the subsidiary and you have to report it.
Beyond 25% stake of GSPC group, it becomes a subsidiary.
Got it. And so that's one. I think that this also covers part of your exceptional items also, which you mentioned. And just one more question, the last question. We have close to 6,000 crore plus kind of cash on the book, and you will be paying close to 9 crore rupees of dividend, which reduced approximately 800-900 crore rupees from the cash balance. The normal capex, what we spend generally is around 800-900 crore rupees. But at the same time, our operating cash flows are significantly higher than that. I remember that in the last discussion, you mentioned that we will come out with some kind of thought process or at the board level, what we are going to do with this cash. Any update on that?
I think just as our MD updated you in the earlier opening remarks, basically we have appointed McKinsey. We are working on that. We'll come back to the investors and all with respect to the way forward on that. Maybe in the next quarter or subsequent quarter, where we have definite plans on that.
Got that. Thank you and wish you all the good.
Thank you. Next question comes from the line of Amit Murarka with Axis Capital. Please go ahead.
Hi, good evening and thanks for the opportunity. On Morbi volumes, I just wanted to get a sense of how do you see the sustainable volumes at Morbi right now? Of course, propane is not available and we have therefore been able to ramp up the volumes quite sharply, almost to full utilization levels. But let's say once things normalize and propane comes back in the market, what would be your sense of sustainable volume from Morbi? And also, secondly, are you still looking to kind of get into the propane business, which you had highlighted last year?
So, on propane, I think at least in the short to medium term, we don't see propane coming back to normal levels. So we are reasonably sure of good amount of sale of gas in Morbi market. And if things get to normal, we will likely see dip in spot prices as well. So I think we are in a good position to compete with propane whenever it comes. So if propane comes back, so would be gas. So I think we'll be in a good position to compete. But as of now, for the short and medium term, we see good amount of sale of gas in Morbi. Second question.
Can you repeat the second question?
Propane business.
Propane business.
On propane business, Yeah, we are basically talking to various ports for setting up the infrastructure dedicatedly for us. In the meantime, we have already initiated discussions with various counterparties for import of propane, counterparties like Qatar Energy and Saudi Aramco and others. We have had discussions on draft of contracts with various companies. But as far as infrastructure is concerned, we are very much interested in setting up our own infrastructure so as to be able to import and store propane without any hindrances. So we are looking at setting up port facilities close to Morbi. Investigations are currently on. So we are in discussions with port authorities in Gujarat. So that is very much on the cards. So propane business, we have not. We are still evaluating that one seriously.
Got it. And just lastly on margin, given that there's a lot of movement in raw material prices as well as your selling prices, what is the margin that one can expect, let's say in the near term on a per SCM basis?
I think margin guidance, I think we'll be maintaining it. There's the volatility that's definite for sure. But I think we'll be able to maintain the trading volumes, the margins in the trading, which we have been maintaining earlier also.
And CGD will still be like, I think, 5.5 rupees SCM?
Yeah, that's the guidance for CGD would be close to 5 to 6 would be there. 5.5 to 6, 6.5.
Understood. Thank you very much. That's all.
Thank you. Next question comes from the line of Varatharajan Sivasankaran with Antique Limited. Please go ahead.
Thank you for the opportunity. So in Morbi, what is the mechanism currently? So the players, they enter into a contract for what period and how often do you roll that contract over?
So it's basically right now they are signing for a month. So it started somewhere in middle of April after the voluntary shutdown. So right now they are continuing, and this month and next month we expect good volumes.
Fair enough. Secondly, on the ELP side, we seem to be booking losses. If you can highlight how it is going on currently and what is your plan in terms of turning to profitability?
Yeah, see, if you look at ELP on an operational level, we are making profits. Only after the depreciation which is there, then only we are making losses. For example, last year ended, we have made an operating profit of close to 29 crores. After depreciation, that's the negative which is there. I think we also have a tail leg of that KG thing, which 10% of that asset we are holding on to, for which we have an operational loss over there. For the other assets, practically we are making profits with respect to the ENP activities. Yeah.
In case you do have some reserve estimates right now which you can share, it will be great. So what we have currently is what you shared.
Yeah, we have the reserve estimate. Basically, the million barrels of oil equivalent is close to 6.71. That is the 2P reserves.
Thanks a lot. I'll come back in the queue.
Yeah.
Thank you. Next question comes from the line of Yogesh Patil with Dolat Capital. Please go ahead.
Thanks for taking my question, sir. My question is related to power segment and mostly to the 700 megawatt combined cycle power plant where we have signed the PPA. On a steady state, how much one can expect the operating profit from this power plant? That's one. And as per my knowledge, the PPAs for this power plant are expiring in 2028. Then are we looking for merchant power selling or we are planning to enter into the new PPAs?
The PPA is expiring in 36, not in 28.
Okay. And sir, steady state, how much one can expect the operating profit from this power plant, 700 megawatt?
See, the thing is, presently, there is no loans. Basically, till the loans were there, basically GUNL was adhering to the fixed cost regime which was there. Wherein GUNL, the utility entity was paying them the fixed cost, which was excluding of the ROE of that project practically. So that state still continues. Basically, we need to explore other options of utilizing this plant, which we are underway. We are actively looking in and pursuing that. Subsequent that, basically, we'll be able to tell you what is the steady state of profits, because the steady state of profits also includes the ROE, which presently is not available because GUNL has funded for that over a period of when the plants are not functioning. So subsequently, once we identify an opportunity, we'll be discussing with GUNL and basically coming up with a business plan for this project.
So GUNL is paying fixed cost. That would be approximately 2.5 to 3 rupees per unit?
Yeah, that's the minimum fixed cost they are paying. That's the maintenance of the plant and the insurance, etc.
Okay. And sir, second question is related to, in the current state, we are selling close to 8 MMSCMD kind of gas to Morbi industry. How one can see the EBITDA margins for this Morbi volume? Because our back calculations are suggesting at a EBITDA level, the margins would be approximately 3 to 3.5 rupees per SCM. Is that the correct calculations, or you can correct me on that side?
We can talk on the quarter one numbers, then we can talk on those numbers.
Okay, sir. Thanks a lot.
Thank you. Next question comes from the line of Probal Sen with ICICI Securities. Please go ahead.
Yeah, thank you for the opportunity again. So just one housekeeping question in terms of the number of shares that was spoken about. What will be the final number of shares post the listing of the new shares for which the approval is pending?
Close to 93 crore shares total.
93 crore shares.
Yeah.
All right. And sir, another was on the JSPC Mundra, what was the LNG volumes that were shipped in FY26 and any outlook you can share for 27?
So I think it's a regasification facility which is there.
Yeah.
Regasification facility is there. So they are not importing cargo. Their utilization was close to 17% of the capacity. And with the terminal being operational now in full swing,
I think right now they are doing close to 35 to 38% of utilization starting in May, and probably June, July would be the same, I guess.
Okay. All right, sir. Thanks. That's all from my side.
Thank you. Next question comes from the line of Nitin Tiwari with Phillip Capital India. Please go ahead.
Hi, sir. Good evening. Thanks for the opportunity. Just a bookkeeping question from my end, sir. Would be great if you can give us the operating profit for all segments for this year as well as last year, and also about this quarter if possible.
Yeah, I'll just basically the operating profits for the last year was around 7. I think you would want the EBITDA numbers, I suppose.
Yes, EBITDA number for all segments, sir, because we've already given the PBT number, I suppose. So if we can also have the EBITDA number.
Okay, the EBITDA numbers. Yeah, for the gas trading business, it is close to 1,300 crores for the gas trading business. CGD is close to 1,900 crores. The exploration business, E&P business, 29 crores, and renewables is 46 crores.
Right, sir. And sir, secondly, how should we look at the gas trading business in terms of growth in its volume? Any guidance that you can give over there? Because in CGD, we usually give a guidance, but in case of gas trading, if you can provide us some guidance, what kind of growth we are looking at?
I think growth, we do expect good growth in gas trading business. We expect prices to be reasonable starting 28, 29. Once the conflict gets resolved, I think we right now are doing close to 10 to 12 MMSCMD, but we do expect by 2030, 31, or maybe 25 to 30% growth in gas trading business.
All right. So thanks for answering my question.
Thank you. Next question comes from the line of Kishan Mundra with DAM Capital. Please go ahead.
Yeah. Hi, sir. Thanks for the opportunity again. So two questions. So firstly, in the segmental bifurcation, sir, where are we including the profitability from Sabarmati Gas, and also in which segment are we incorporating the take or pay charges of 200 crores?
I think it has been shown as an unallocated expenditure with respect to the consolidated numbers because that's for the respect to the GSPC LNG which is there. Other than that, it has been allocated to the respective segments in the standalone.
No, sir, you can solve. Yeah, go on.
No, tell me.
So Sabarmati Gas, let's say, where is it included? It's unallocated or it's part of CGT? Yeah.
Sabarmati Gas, it's a JV, so it's the equity tie-up which happens. So basically, only one line comes in the profit statement. So there is no line-by-line accounting with respect to the Sabarmati Gas.
Yeah, but in the segmental breakup, it should be a part of other unallocated expenditure?
Yeah, it will be part of that, yeah.
Correct. And the 200 crores of take or pay that we had paid would be?
We have not paid take or pay. GSPC LNG has paid to us. So that is part of the consolidation unallocated number which is there. That's close to 200 which is coming in.
Okay. And the second question is, we were talking about setting up infrastructure for supplying propane business. So what kind of infrastructure is it that we're talking about, like setting up tankages and pipelines to Morbi, or what is it exactly?
It's basically setting up a import jetty and storage tanks.
Okay. Understood. Thank you.
Thank you. Next question comes from the line of Bineet Banka with Nomura. Please go ahead.
Hi, sir. Thanks for the opportunity. So on the gas trading business, how do we look at the margin per unit? For GAIL, I think they have something like 20 cents per MMBTU for LNG segment trading. So any number which you can share for the gas trading per unit margin?
We have been making a margin of from around 4% to 6% in the gas trading business. I think we can go with that percentage.
But you don't share any per unit kind of, because that will be blended from the imported LNG as well as domestic gas. So just a breakup would be more helpful.
Yeah, but today we'll share only this percentage which is there.
Okay. And on the tax loss, I think there is a 7,200 crore of tax loss, which you mentioned earlier. So in the balance sheet, where can I see this tax loss asset?
We have created a deferred tax asset. I think the detailed schedule which comes in, there will be a different schedule for the deferred tax and the tax calculation which will be there.
Okay, and in how many years you have to use that 7,200 crores?
We have to use that in 8 years, but we already used close to 5,000 crores in the last 2 years, 24-25, 24-25, and 25-26. So practically for the last 2 years, the advance tax we paid, close to 900 crores of refund would be available now.
So balance is around 2,000 crore odd.
Yeah, close to 1,900 crores is balance, yeah.
Okay. And so lastly, on the balance sheet, I think in the presentation you mentioned there's a cash balance of around 5,000 crores. But if you add the numbers in the consolidated balance sheet, cash and cash balance is around 1,300 crores, and there is another item, other financial assets, that is around 5,500 crores. So that gives you around 6,800 crores. So I'm a bit confused. What is the correct number?
No, I think from last 2 years we have changed the representation of that. Basically, the long term, the fixed deposits which are more than 1 year, we are showing it as other financial assets which is there. So that's the classification.
Yeah. So if we add the cash balance plus other financial assets, the total comes to around 6,800 crores kind of. And you have mentioned 5,000 crores in the presentation.
No, yeah, but see, other financial assets, one of the line items is with respect to the GSFS funds which you have placed. So once you get the detailed schedule of accounts, basically this will be clear.
Mm-hmm. Okay. And one more question, sir. at current spot LNG price of, say, $17-18 and dollar at, say, 95 rupees, and I think the pre-VAT price, selling price in the Morbi region is around 73 rupees per SCM. So are we making money at the EBITDA level on these numbers? Because if I do the math, I'm looking at negative margin.
If we are in a business of making profits, so we cannot be making losses.
So, sir, what is the selling price of Morbi region? Is it 73 or higher than that?
73 is at a particular exchange rate at a particular net calorific value. So depending on the calorific value and the exchange rate at that point of time, the prices are basically indexed.
Okay, so
basically exchange rate is passed through and calorific value, yeah.
So at current exchange rate, what will be the price? The 73 becomes 77, 78. What could be that number?
Around 76, I guess.
76. But I think even at 76 and $17 spot price, I don't think we'll be making margin of, say, 5 or 6 rupees per SCM, which we have guided.
No, but we are not selling at a loss for sure. That's not possible for us to be selling at a loss, and we are making
The price is valid for the whole month, or and changes start of month, or it changes even during the month?
It doesn't change during the month. So the price for May was fixed. The price for June is also fixed.
Okay. Can you share June price if possible?
I think we have increased by 1.5 rupees.
Okay, so 77, 78 kind of number.
Yeah.
Okay, sir. Thanks. That's all I have. Thank you.
Thank you. Next question comes from the line of Vikas Jain with CLSA. Please go ahead. Mr. Jain, please go ahead. Mr. Jain, please unmute yourself and go ahead with the question.
Yeah, hi. Am I audible?
Yes, please.
Yeah, audible.
Okay. Yeah, hi. Thanks for taking my question, sir. On the gas trading business segment that is there, when you show that the 4Q volume was, I think 4.6 MMSCMD or so, the volume that you procure and use within city gas, is that also part of 4.6 or that is over and above that? I want to understand that. Earlier there was an arrangement where GSPC would procure for Gujarat gas. How does that work in the merged entity? If you procure LNG, does it straight away seen as a city gas volume for city gas, or it goes through gas trading?
No, I think in the press release also it's very clear what is the volumes, the total volume of the company, and what is the volume which is inter-segment sales which is there. So that's very clear in the press note itself. So then the net trading volume of 4.94 is excluding the CGD. The total is close to 10.90.
Okay. And so when there is an inter-segment over there, like the segmental EBIT that you have given, that would be including the margin for the inter-segment transfer? Is that how it would be? Like you've given a segmental EBIT for gas trading.
No, we are not giving you the EBITDA for gas trading.
EBIT. The segment results, whatever that you call.
Yeah.
So that is EBIT, right? Because what you call a segment result, where gas trading.
Yeah. 1,300. Yeah, it includes the segment. Yeah, you're right. It includes the profit from the gas trading also. Yes.
So it includes the margin that the gas
margin
trading would charge.
Yeah, you're right.
The gas to city gas, is that right? Yeah.
Yeah, you're right. Yeah.
Okay. And so just maybe one suggestion, because as now it's multiple segments which are there, I think it will make a lot of sense if you add EBITDA in your press release, because that is how, that's what most companies with multiple segments also do. It helps the analysis because the multiple that each of these segments will get would be very different.
Yeah, I understand. Yeah, we'll try to improve. Yeah. Thank you.
Okay. Thank you.
Thank you. Next question comes from the line of Somaya V. with Avendus Spark. Please go ahead.
Thanks for the opportunity, sir. Sir, you did give the EBITDA breakup for the full year numbers. Could you just provide the same for Q4? Segment level EBITDA breakup.
Yeah, definitely. Yeah, for Q4 of 26, it's gas trading is close to 400, CGD is close to 450, ENP is close to 14, and renewables is 5.
Got it, sir.
Yeah.
And so in terms of the gas trading business, if you could just, I think you did mention at the beginning in terms of contracts. On either sides, from a sourcing standpoint, currently, the long-term contract until what point we have, and also from an end consumer, you did mention about refineries and fertilizers, till what point are these contracts? And if you can provide the quantum, that would be helpful.
So our sourcing contracts, we have 2 contracts with Qatar, one with Shell and one with Uniper and Total also. So the existing contracts with Shell and Qatar, they run up to 28 and 2030. The new contract from Qatar starts in 26 and is valid for a period of 15 years, I guess. 17 years. Total energy contract is from 2026, so it goes up to 35. Uniper 28 to 37. So that's on the sourcing side. One of the Qatar contracts expires in 28. Shell contract can expire in 2030. On the sale side, on the customer side, we have contracts till with fertilizer companies which are valid till 2028, and we are obviously talking to the fertilizer companies for extension. Not only extension but increase in volumes as well. So we hope to do much more volumes than what we are doing right now. Then we have contracts with some other CGD companies other than Gujarat Gas. For example, Sabarmati Gas, Indian Oil, Adani, Charotar Gas, IRM, IGL, and Mega. These are long-term contracts. Then we have, as far as industrial customers are concerned, we have contracts with JSW. Then we have contracts with Deepak Fertilizer. Then PGP Glass, Indo-Beijing Nirma. There are many industrial customers with whom we have long-term contracts. And obviously, after this contract expires, we are talking to them for renewal as well.
This is helpful, sir. Just one additional thing. If you could just help with the quantum on these contracts. So, for instance, you mentioned Shell and Qatar. So what would be the existing quantum, and also the 3 new contracts that you mentioned, what would be the quantum?
The quantum of purchase contracts?
Yeah, purchase contracts. Yeah.
So the contract with Qatar Energy that we signed is 1 million ton, but it has a ramp up. Starts in 26 and goes up to 1 million ton in 2030. Then Total Energy is like 6 cargoes per year. Shell we have 15 cargoes per year, and Uniper we have 6 cargoes per year starting in 2028.
Got it. And this 1 million ton, because of the West Asia conflict, do we see any impact this year, or it can still come in?
So yes, there will be impact this year because of the conflict. Yes, I think we have already lost 2 cargoes which were scheduled this year. In May and June.
Got it, sir. Thank you. Thanks for the answers.
Thank you. Next question comes from the line of Raj Kiran Gandhi, SBI Mutual Funds. Please go ahead.
Hi. Thanks for the opportunity. On this demerger scheme, from what I understood, you mentioned that the shareholder of erstwhile GSPC and GSPL will get the shares of transmission entity. So, in effect, that 12th May, that ex-date was also the ex-date for the transmission shares. If I buy the shares today of Gujarat Energy, which is listed, I will not get the transmission entity shares. Is that correct?
You will still get shares of transmission entity because we are yet to fix the record date for GTL. So once we have credited shares to the shareholders of GSPC and GSPL, thereafter we are going to fix the date for record date of GTL. And whosoever is holding shares on the given record date will be eligible to get shares of GTL.
Okay. Okay, sure. And given the quantum of that other financial asset is huge, possible to share the breakup so that people can make assessment in terms of underlying how much to take as cash and.
Yeah, you can definitely. You can send us a mail. We can give you the details because it will be part of anyway it will be part of the account.
Sure. And this 900 crore tax refund that we are due on this past losses that we have set off, by when should we get that?
Yeah, it's an assessment which happens with the income tax department, so that will take its time.
Okay. But against this future, you have about 1900 crore of pending losses. Here, you will straight away not pay any tax, right? So there it won't be a question of.
No, they will not be paying any tax.
Okay, perfect. And for this power plant which is there, in your assessment, what level of spot LNG gas will help turn us around on the PLF and all?
I think yes.
I think we're close to what they generally tell us is that $6, $7 gas will make things work for them.
Okay, sure. And this gas trading business which is there, last question, here you will try to now incrementally grow it as an independent business in itself, or it will largely be to kind of just support our CGD, power and other businesses, or we should see it like just like GAIL has a big trading business independently being done. It will be kind of directionally be run that way.
It's business as usual for us. I mean, obviously, one of the bigger customers would be our own companies, but we will be independently trying to sell additional volumes to other customers also.
Sure. Thanks. I will come back in the question queue.
Thank you. Ladies and gentlemen, as there are no further questions, we have a question that is from the line of Sabri Hazarika from Emkay Global. Please go ahead.
Yeah, good evening. Thanks for giving me the opportunity. Just a small question. This, gas trading.
Please go ahead.
Hello. Am I audible? Hello.
Yes, Mr. Hazarika, you are audible. Please go ahead.
Yeah. So gas trading. Yeah. So gas trading. Wanted to know when we talk about the trading EBITDA and trading EBIT. So that is on a total volume of 13-14 MMSCMD, right? Not this 4-5 MMSCMD pure volumes. Is that right?
Yeah, 1,300 crores you are talking about.
Yeah, so that would be on 13.5 MMSCMD, which is the total.
Yeah, you are right. Yeah.
Yeah, so the trading margins, even for our own entity, that part is part of gas trading.
No, just a minute. That 1,300 would be for the gas trading volumes of the previous year. That would be close to 10 MMSCMD.
Okay, that is 10 MMSCMD for the full year.
Yeah, for the full year, yes.
And right, if I add the CGD and the trading volumes, then I think the number comes at 13 MMSCMD. So that is which number? I mean, what you have reported in your press release?
Yeah, because for the CGD, you are also getting APM gas allocation also, no?
Okay. So that is another.
Yeah. So basically, for the total volume of gas being sold or purchased for the company, that will also be included as a part of this.
Okay, got it. So the GSPC portfolio is mostly LNG portfolio only, which is around 10, 11. And anything on top of that is basically APM plus NWG and all, which is coming.
Fuel gas plus whatever is allocable to the CGD business, that will be coming in separately to the CGD business. Yeah.
Okay. So for the full year, the GSPC volume is around 10.5 MSMD. Is that right?
Yeah, 10.1. Yeah, you are right.
10. Thank you so much. All the best.
Thank you. Next question comes from the line of Hardik with ICICI Securities. Please go ahead.
Yeah, thanks for the opportunity again, sir. So I just want to know what would be our investment so far in GSPC Mundra LNG?
Investment.
Yeah, what will be the investment value?
Yeah, we have a 38% investment over there.
Amount?
Yeah, they are close to around 1,700 crores.
1,700 crores. Okay. Thank you.
Yeah.
Thank you. Next question comes from the line of Gagan Dixit with Elara Securities. Please go ahead.
Yeah, thanks for taking my question, sir. Sir, for the GSPC, what is the user industry breakdown of the...
Sorry for interrupting, Mr. Dixit. We cannot hear you. Can you speak a little louder?
Am I audible now?
Yes, better than before. Thank you.
Yeah. So just want to know, for the GSPC, what is the user industry-wise breakdown in FY26, sir?
Yeah, basically you are talking of the segment which we sold gas to. That's what you are trying to tell us with respect to the gas trading business?
Yes.
Basically, city gas distribution companies, then we have fertilizers, and then refinery, power, and other industries.
Yeah, close to 52%. Yeah, 50 to 53% goes to the city gas. 27% goes to the fertilizer, and rest is others.
And sir, my second question is that as the CGD volume will become very significant spike because of the Morbi demand that you are catering. So sir, what is the risk mitigation plan? I mean, to safeguard the LNG, because initially you depend more on the spot LNG or short-term LNG. But ultimately, you need some medium-term or long-term contract to avoid the volatility, or you can say some crude-linked or Henry-linked type contract. So what is the ultimately plan over the next 1 year if we want to see this business?
Sorry for interrupting. Mr. Dixit, we cannot hear you. Your voice is breaking. Can you come in the range and talk?
Is it audible now?
Yeah, it's audible.
Yeah. So I just want to know that your CGD, with the ramp up of the Morbi volume, so I think near-term dependency on the short-term LNG will increase you. So what is the risk mitigation plan for that? Because your volume ultimately to convert it to the medium-term or long-term contract in 1 year down the line to avoid the volatility in the gas cost, something like that, if you try to see in 1 or 2 years down the line, sir?
So basically what we are doing is we have signed a few long-term contracts that I talked about with Qatar and Uniper. These volumes are linked to Brent and at a very attractive linkage. Propane prices also vary along with oil prices. We understand that these prices are competitive vis-a-vis propane, and we will be able to match the propane prices with these volumes. In addition to the contract already signed, we are also looking for volumes on Henry Hub so as to provide a stable pricing which will be able to pass on to propane consumers. So we are looking for long-term volumes so as to have a stable kind of supply supplies in Morbi and be able to compete with propane as well.
Yeah, that's it. Thanks for my question. Thanks, sir.
Thank you.
Thank you. Next question comes from the line of Vineet Banka with Nomura. Please go ahead. Mr. Banka, please go ahead with the question. Mr. Banka, please unmute yourself and go ahead with the question. Since there is no reply from the line of Mr. Banka, we'll move to the next. That is Nitin Tiwari with Capital India. Please go ahead.
Thank you for the opportunity again, sir. Pardon for a very basic question, sir. So, like we are eliminating basically the intersegment, how is that adjustment happening in the case of your PBT margins? Because as you mentioned that gas trading, the 1,300 crore is the total margin for all the volume of all the trading volume, which is 10.5, I suppose, right? But the net volume is only 4.5, around 4.5. So how is the margin adjustment taking place? If you can throw some light on that.
I think we are showing the revenue adjustment with the intercompany sales over there.
Yeah, revenue is inter-segment sales, that I understood. When we come to the margin, which is your EBIT or PBT margin, so their gas trading margin is the total margin for the entire volume, right? So,
Yeah.
but effectively it should be for the net volume, right? So, how's the extra margin getting compensated? I mean, adjusted.
So that's the segments will be having their own profitability, no? So that is reflected as a cost in the other segment, CGD business. So you need to understand that for 24, 25 and 25, 26, the companies were operating separately. So the numbers basically are flowing from the accounts itself. The list numbers which are
So basically that becomes a cost for the city gas segment. I mean the margin.
Yes, you are right.
Okay, got it.
You are right.
And if you can help us with the EBITDA numbers for FY25 as well, the segmental EBITDA you gave for 26, for 25 as well.
25, yeah, 25, it's gas trading is close to 1,200 crores. CGD, as you will be aware, it's close to 2,000 crores. ENP is close to 9 crores. And renewables is close to 39 crores.
All right, sir. Thank you so much.
Thank you. Next question comes from the line of Amit Murarka with Axis Capital. Please go ahead.
Yeah, hi. Thanks for the opportunity again. So, just on this whole transfer pricing that you're following for trading to CGD business, there's an element of profit within that, of course, I understand. But is there any thought or consideration that to transfer that volume to the CGD business on a cost basis, given that it is one company now and anyways volumes you're netting off to show only the external sales? Or will it continue to be booked as a trading business EBITDA, like how it is being done currently?
Yeah, we will be optimizing that, but to what extent we'll be doing, because these are two separate business segments as such, being evaluated separately with respect to their performance, etc. So to what extent basically we'll be transferring the profits, etc., that will be over a period of time, we will come to know with the results which is being out.
Sure. And just a follow-up to the earlier question, I think to put it another way, I mean, is the margin similar for when you transfer to the CGD business as well as to third parties, or is it lower for the CGD business?
Basically, when we sell to any consumer, it's basically basically the pricing that we do is basically depending on the opportunity that is available in the market. For example, if we are able to sell at a price which is higher, then obviously we'll be selling at a higher price. So obviously it won't be same always.
Yeah, only thing to add is basically now we have a flexibility of basically doing an inter-segment sale without that arm's length thing. So that obvious optimization would definitely happen with respect to the CGD and the gas trading business.
Right. So fair to say that you will try to then maybe book more profits in the CGD business in the future years than the trading business.
I'm not saying that, but you can always interpret what I'm saying.
Understood. Okay. That's helpful. Thank you.
Thank you. Ladies and gentlemen, that was the last question for today. We have reached the end of question and answer session. I now hand the conference over to Mr. Sandeep Dave, Company Secretary, for closing comments.
I will take this opportunity to thank everyone for sparing their valuable time. We look forward to interact with you in early August with Q1 results. Thank you all.
Thank you. On behalf of Gujarat Energy Limited, that concludes this conference. Thank you for joining us. You may now disconnect your line.